Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The start of the original big move up back in November last year was generated by the large April to late October ascending wedge pattern. Following this, the first large leg up was from mid-January this year, pushing and closing over the early December 2024 high at 348.35, and into new territory for the second leg higher, such that by early February the market had broken over the latest 50% projected Fibonacci line at 402.05, reaching up to a high at 429.95. Prices then had a pullback into late February and a fresh rise and fall also 3 weeks ago. This action was significant as the market did not make a new all-time high at this session, thus sowing some low-level bearish doubts, however minor they may be, into the last 2 weeks' actions, with prices significantly staying below the 50% projected Fibonacci line at 402.05. All these actions allowed me 2 weeks ago to draw a dark blue late December 24 to late February 25 bullish shift pitchfork. As I said last week, and I quote, "This is a nascent, prospective, bullish shift pitchfork, and I'll be especially interested to see if the lower time, currently at 339.45, has a desire or application to support the market." End of quote. Well, since then it looks like the market does not have the necessary desire or application to support the market, and at most is becoming an actual resistance to any attempts higher. Then last week I drew my first bearish Andrews pitchfork here in bright green for the early February to early March move. The first bearish pitchfork of any sort for quite some time. I have kept it on today as a more acute bearish Andrews pitchfork, even if it is being breached and broken right now rather than the shallow and still fitting bearish shift pitchfork, because I'm on the verge of thinking that this all might be yet another pattern, an early February sideways triangle, as yet unhighlighted, but between 376.10 to 408.70, though I am reserving the right to morph the pitchfork into a shallower bearish shift pitchfork probably next week. For now, it does look as if the top side has become well protected, but that there is no immediate incentive to pursue the lower market idea. However, just in case, we have below the rising green short medium moving average, currently at 371.10, and below this the early December 2024 to date bright red uptrend, currently at 357.80. The rest of the month of March will prove to be very interesting. So what else is there? What now? Well, for this I am indebted to Ray Bradbury for asking me about New York coffee 5 weeks ago. And I went at the time to my longer term charts, the monthly charts. You see, on the monthly charts, the longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed these charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom for bright red neckline on my daily chart, currently at 273.80. The break higher over this neckline has already reached its primary target, but it has still open the secondary hardest to reach, much harder to reach target X up at 433.35. What is interesting about this is that nearby to target X is the next 100% projected Fibonacci line at 433.75, quite close in the scheme of things. So what does this mean? Does this mean the market will turn at these levels? I could not say, not yet. Though we did have a possible monthly shooting star pattern last month, and I'm wondering if right now we are trying another attempted shooting star pattern this month. You see, shooting star patterns are usually seen as bearish, though there is a bullish variety. What I can say is that if there ever was an area where the market could hesitate on the top side, then this 433.35 to 433.75 area would be a reasonable choice. I'd watch that area and any approach to that area very closely. And it may even be that last month's shooting star pattern may have been the final move in the attempts higher. just under target X, but as yet it is too early to say from these longer term monthly charts. London coffee. 16 weeks ago I drew a new large pattern that encompasses all the recent significant elements. It is not ideal and is quite large, but it does show promise. It is the bright red, shallow, large bull channel, currently 46.91 to 59.91. Within this pattern sits another pattern, just above, an early November to early December 2024 bullish shift pitchfork, highlighted in dark blue on my daily chart. Right now prices are testing for a 5th consecutive week. The combination of the dark blue lower time, currently at 54.99, and the slowly rising green short-term medium moving average, currently 54.52, plus the more recently drawn late November 24 to date uptrend, currently at 54.26, which I will shortly discuss. The shallower dark blue bullish shift pitchfork has shown the bullish angle of attack of this market since its inception, and the support seen from the lower time was there back in mid-January, and the more recent support seen from the green short medium moving average, and especially the newer bright green uptrend seen over the last 4 weeks, to me adds some legitimacy to this pattern, though as we can all see it's being very tested right now. There is also another pattern to consider here, which I pointed out 5 weeks ago. It's a late January, late February Adam and Eve double top pattern. The primary target was reached 4 weeks ago, leaving only the secondary harder to reach target X at 51.28 still open. This target is just above the small congestion zone seen in late December 2024 to January 2025, between roughly 48.40 to 5100, that formed back then a small pattern, a double bottom, as well as seeing the slowly rising medium moving average, currently 51.99, push up through the congestion zone. However, to further achieve the outstanding target X on the downside, prices need to break down through the previously mentioned green short medium moving average, plus the dark blue lower time, as well as the bright green uptrend, which, to be honest, they've tried, but now they're on their 5th week of trying. I'd only add this final thought, which I detailed for the first time last week, and that is I drew a purple downtrend, currently at 56.26 from the mid-February high to date action. This is a nascent downtrend, untested in recent days, but it's still just about a three-pointer, so it deserves some respect. My only other thought on this is that the action from mid-February to date could make a nice descending triangle, utilising the purple downtrend and a base on the 5300 zone. I'll say no more on this matter as yet.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.